Do you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Well, everybody, this is Harold Green of Bright Tree Wealth Management, and it is time to stop doing what you hate. Hopefully you folks are having a fantastic day today. I'm doing pretty good. Getting ready to do some more traveling and starting to get excited about that. And I'm starting to realize right now that I need to take a break every quarter because things have been absolutely crazy. Mind-boggling, just like crazy. And so I'm very grateful for the opportunity, and also grateful for the opportunity to serve my clients and to be a part of their financial team. And I'm close and friends with a lot of my clients, and I really enjoy the relationships. And I think that that's what makes it all the more worthwhile for me. And we're a small firm, but we're growing like crazy. And I like to try to keep a small company feel to things, and a type relationship type of thing, close relationships, those kinds of things. And I'm kind of battling with the idea in terms of like the company growing and stuff like that. And it's not by my design. It's not like I'm saying, hey, I have growth goals, I need this many employees and da 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 da. I think our goals are more, what do we want for our clients in terms of how much money do I feel they're going to need when they retire? And what are the goals that we're shooting for them? What kind of returns are we shooting for them? And that's been our main focus. And we're growing because we're hitting our targets, we're hitting our objectives, and clients are quite pleased with it. And so they're referring more and more people in every month, and I'm grateful for that. And so I'm just looking forward to the future. And today I want to talk to you folks about something that I've thought about for a while, and I wasn't sure how I was going to share it or what it was going to sound like, but I want to really just kind of get into it. And so the title of today's show is going to be Hints and Clues, like hints and clues. And so, are you ready? 1, 2, 3, let's get it. And so a while back, something happened in the market, and this is going to be a bit of a stock market update, but it's also just kind of insights into my mind and things like that. And so I want to talk to you about a company that got beat up a while back, and that was a company called Palantir. And Palantir, I want to say year to date, the ticker is PLTR. And year to date, if we take a look at Palantir, it's one of those companies that's just been like on fire. And so year to date, they're up 156%. And we've had options in that position for quite a while now, and we're up over 2,000% in an option that we bought. I think it expires in June of 2026. And people ask me, like, okay, how do you know which way the market is going to go? Like, how do you know what's what? And say, well, a lot of times I don't know what the entire stock market is going to do. And by the way, this is an investment show, and got to talk about this. All investments do carry risk of loss, and so before you invest in any money in the market, do your due diligence, understand your risk tolerance, time horizons, and make sure you're investing according to a well-balanced, comprehensive financial plan. And past performance is absolutely no indicator of future results, right? You have to understand that before you get involved with investing in anything, whether it be stocks, bonds, mutual funds, gold, cryptocurrency, Rolex watches, Lamborghinis. Like, you got to understand that, okay, what the risks are associated with your purchase or your trade per se. But Palantir, they got hit, and they get hit hard because somebody leaked an internal memo. And if you go and you Google this and you turn on AI mode, and I'm just going to do this with you real quick, and you just say, why was the internal memo on PLTR leaked? And it'll say something like, it says, while the specific reason for the leak of the internal U.S. Army memo regarding a Palantir and Anduril battlefield communication system is not publicly known, it brought to light fundamental security problems with the proto system. The memo, which came from within the Pentagon, described the prototype as very high risk due to vulnerabilities, and some speculate that someone within the Pentagon may have leaked the document, right? So leaking documents that are classified as a crime. Somebody committed a crime. And they're not saying who that person was. But here's the problem. By the time this memo leaked, Palantir had already fixed the problem. And so to me, in my mind, it's like, okay, Why are they doing this? And I always start to put two and two together. And so immediately I went to the PLTR short interest. And just to kind of get a chart on like the short interest ratio and where it's been and stuff like that. And so so when that memo was leaked, basically the shorts were just like raging and they were shorting that stock like crazy. They were saying it's going to crash and blah blah blah. And the bears were out like, they had this thing shorted like crazy. We're talking billions and billions of dollars short. So I can't say whoever did this did it, to help someone make money. I can't say that because I don't know that for sure. It just seems like the timing was awfully suspicious. Like it's awfully suspicious. Like these guys are shorting stock like crazy, and all of a sudden an internal memo gets leaked. That's damaging. So a memo getting leaked does nothing to help the stock. It's only to hurt it. That was my assumption. And so I was telling the clients this, and I said, "Here's what happened to the stock today. Here's what we're going to do. We're going to load up on the options on it because I cannot guarantee you, but I can think within my mind that this was fake. It was an attempt to hurt the position because no other reason why it would come out. Like they had already fixed the vulnerabilities, and the problem with this internal memo was it was leaked after the situation had already been resolved. That's the crazy part. And I don't know if that person who leaked that knew that, but they did it anyway. And I hope to God they find out who did it, and I want to know why they did it because this is just crazy. But for me, we're talking about hints and clues. We're talking about, okay, how do you make money in the stock market? How do you make money trading stocks? And for me, one of the things you have to do is you have to look for these things that are like, I can't say the word guarantee. The only thing I can say is that if something hurts the stock, it's something that's hurting the stock artificially. And if you know that that situation is going to get resolved, only problem is you don't know the timeline and stuff like that. So I said, okay, that's crazy. So one of the things I also did was I started doing some research using Chat GPT-5. And a lot of times these the answers are going to be how can I say this? Well, one of the things I was doing research on was this government shutdown and positioning of portfolios. So I do my own research, but then I like to look for facts and clues that are going to, substantiate my thesis. And that's all this is you got to have the ideas in your head and then you have to go prove your thesis right. But you need research tools to be able to do that. So I already knew what I wanted to do. And so started doing research on it. Like, okay, if the government shutdown happens, how is it going to affect GDP? Is it going to be how negative would GDP look if the shutdown is a month? What if it's 2 months? Like, what if it's 3 months? What's the impact on GDP? Also, what's the impact on inflation? And that's a big thing right now. So we're waiting on Fed to cut rates. We want inflation to go down, but we also want interest rates to go down. And so there's a whole big conundrum about how fast the Fed should or should not be cutting rates. A big, big conundrum about that. Some think the Fed is so far behind, it's insane. And so you had Amazon coming out talking about cutting jobs, and then their stock gets hammered. The earnings came out, they smashed on all levels of their earnings, but yet the stock got hammered. That was a hint for me to pick up more because guess what? Amazon apparently is in the Mag 7 and they've been underperforming all year. And so the question is okay, when all these other things pop off and they go up and people take profits, where are they going to go? They still want to be in technology. They still want to have their hands in that. So they're looking for tech companies that haven't kept pace with everybody else. And I felt that Amazon was going to be one of those companies that got the lion's share of tech money whenever the other stuff popped off. And so go take a look at Amazon year to date. Man, Amazon year to date, they're up 13.22%. But that's just recently because they just took a huge leg up. So in October, I am buying as much Amazon as I can get my hands on. I've been buying as much Amazon options as I can get my hands on all year. Every time they crashed it, I bought it. They crashed it, I bought it. From October the 15th, when Amazon was trading down at $214 a share till today, Amazon is trading at $248 a share. That's a big time move. I mean, that is a huge move. So what I'm going to do is I'm going to log into my portfolio and just talk to you a little bit about that, what that trade actually did and how much it's up by. So I'm going to go into my portfolio. I'm going to look at what I have and just kind of say, okay, this Amazon, when did I buy it? So the Amazon 300 I'm going to look at the Amazon 300 that expires 12/17/2027. 320 is what I bought. And so the last one I bought was 10 days ago, and I bought 10 contracts for $23.90 times that by 100 is $2,390. But on October 22nd, I bought 4 contracts at $1,900. On October 17th, I bought 10 contracts. October the 14th, I bought 6 contracts. On October 13th, I bought 10 contracts. On October 7th, I bought 20 contracts. They're up 78%, 77%, 78%, 84%, 77%, 44%. This is all within like a month. And so when people ask me like, well, how are you doing this? How are you like, I tell people like, I'm not super smart. The only thing is I know how to read, I know how to write, I know how to add, I know how to subtract. And I believe like God has given me this gift of insight. I won't say it's a gift of knowledge or knowing, but it's like a gift of insight. And it's kind of like you absorb so much data, you consume so much data, and now you have to properly put that data into a trade. And that's what we've been doing for our clients all year. So when I talk about the market giving us hints and clues of what we should be doing and where we should be going, I listen to a lot of commentary on the stock market, but that's just all part of my research. And some people say things that I agree with, some people say things I don't agree with, but sometimes I've learned not to automatically discount the things that people are saying that I don't automatically agree with. I look at it and I think about it, and then I try to put it in its proper perspective. And one of the questions I got the other day was this whole thing about the AI bubble. Like, Harold, we're in, I just keep getting this question over and over again. Like, are we, are we in a bubble? Is this like Y2K? Is it like, is it all going to crash and the air is going to come out? And when I was talking about this with the analyst, and so I said, these are all very valid questions. And I said, let's go do a little research and just kind of compare what was happening back then to what's happening right now. So we said, okay, what is the current S&P PE? So the current PE for the S&P, was it like, let's see here, it's approximately 30.60. That's the S&P's price to earnings ratio. And I said, okay, let's go take a look at Amazon. What is Amazon's price to earnings ratio? It's 34.5. And this is crazy because Amazon is only trading a little bit higher on the PE in terms of like the S&P. So you could literally buy the S&P and Amazon and kind of be right there side by side in terms of price to earnings or whatnot. You guys can go look up PE later, do a deep dive on that, get to understand how PE affects how people think about stocks, right? They say the higher the PE, you don't want to touch a high PE because if it's too high, then if the earnings don't catch up, then you're looking at a disaster and blah, blah, blah. Same thing was going on with Palantir. Hey, the valuations are stretched. The valuations are stretched. Like compared to what? Well, compared to like what they used to be a long time ago, compared to like companies that you like, but nobody's buying. So you trying to like get people out of stuff into stuff that you like, and you're saying valuations are stretched. Well, what if that's not true? What if it's not true? And we just saw that with Palantir today. It's made a monster move. And the PE it's like, it's insane what the PE is. And so I'm going to look at it right now and say the PE is 416.1. It was a lot higher than that, but they got drubbed the other day. And then year to date, they're up 156%. And the last 5 days, they're down negative because they got hit so hard. They went from being up like $206 a share, being down to $170 a share. And what were we doing? We were buying Palantir options when we were getting smashed like this because there's no reason for it. There's absolutely no reason for it whatsoever. And these companies are going to come out and they're going to continue to make deals because this is where the world is going to go. We are going to go from a world of everybody wanting to go to college for 4 years, coming out with degrees that don't make much money. And they're going to start to go into jobs where it's like, hey, case in point, I always like to talk about my life. And this morning I ran into this guy in Starbucks. I've been seeing this guy go to Starbucks for like years, but I've never even talked to him. And he works for the post office. And he was like holding the door for people. And when I got there and he wanted to hold the door for me, and it's like, no, I want to hold the door for you. He's like, no, I said, man, we're going to be here all day. One of us better get inside. And so we went inside and we struck up this conversation, and he was full of joy. So I'm talking to this guy, and, we were talking and stuff. And I said, I've been seeing you for years. You work for the post office. How you like it? I was like, how long you been there? He's like, I've been there for like 11 years. He said, I love it. He said, I love it because I get to go out, I get to sweat all day, and I get to sweat at my job, and I'm on my feet here and there. I get to take a break, and I just love being able to move around. And he said, people put blue collar jobs down and you wouldn't believe it. And he said, but I love my blue collar job. He says, I came from the white collar job world. And I said, what? He said, I used to be a financial advisor for so-and-so. I'm like, what? And he went to being blue collar. Like, he's like, just told me his whole story and stuff. And I was like, that's pretty cool. And I said, I used to be blue collar, and I went to the exact opposite. Now I own a firm, right? And so he was just talking about how excited he was to be able to do his job and just love it. He makes good money, has a pension, and he's going to be fine. And he said, when I had kids, things had to change for me because as a financial advisor here in Hawaii, you're always out smoozing and boozing and golfing with everybody. And, I got the kids at the house, but I can't be at home because I'm out at dinner at night and trying to just like get clients. He's like, no, I don't have to do any of that. I don't take any of that stuff home with me. The post office, it stays at the post office. When I go home, I'm doing my thing. And then when I go to work, my work is there. I don't take it with me. And I was like, wow, that's a very interesting perspective. And I think that the world is going to go that way. And more, you're going to have blue collar people working with AI because AI can't do everything. I think AI is going to take more white collar jobs than blue collar jobs. I think that's going to be the case. I don't even worry about my job. Is my job safe? Because the thing about AI is we have to use it and have what they call productivity gains by using artificial intelligence. And it's pretty cool. It's not supposed to replace your brain in terms of how you think, but it's there to help you as a research tool. So I was very excited about that. So hints and clues, there are going to be more things. And this whole government shutdown was just a big hint, a big clue that the sentiment is going to turn negative. The Michigan AAII investor sentiment turned really negative. It turned really bearish. And the problem with these surveys is you can take a survey and make it go skew a certain way by your sampling, like where you decide to survey. And if you oversample people who lean one way politically, and if the guy that they hate is in power and they don't like the guy in power, their sentiment is going to be negative. The problem is it doesn't line up with what they do with their money. They'll say, yeah, it's so negative. Sentiment is negative, but they'll go pay $300 to watch a football game and buy a $50 hot dog. Like, it's not lining up. What people are saying and what people are doing is totally different. So when they asked Jay Powell, they said, hey, like, can you like get on these rates? And people are hurting. He said, no, they're not. People aren't hurting like you think they're hurting. People are saying they're hurting, but they go and they do other stuff. It's like the pour mouth thing where people try to outpour each other. Like, I got 10 holes in my t-shirt. Like, no, I got 30 in mine. Let me go home and get the one that got 60 in it and come back and like trying to outpour each other. And people say things like that. And I look at that and say, okay, me and my clients, we're past all that. And really the whole goal is to look for opportunities. They're going to take you the next leg up. So we piled into a bunch of cash and we started reducing some of our positions in gold and things like that. And we started rotating to these things that are getting hammered during the shutdown. And lo and behold, as soon as they come out and say, we're going to have there's hopes that the government's going to reopen. And who knows, it's longer term, but I don't think we're in an AI bubble. I think we're just at the very beginning of this thing because I'm seeing a lot of things. I travel a lot. I go to different places and I talk to a lot of different people. I see a lot of different technology being used in different aspects or whatnot. It's coming hard. And you got to get ready for it. So that's pretty much all I wanted to share with you folks today is what are you looking for out there when you're making your trades? How do you take advantage of the things that is being handed to you? And the one thing I'll leave you with is this. Every day you have to be paying attention. You cannot just stick your head in the sand like an ostrich and say buy and hold and hope it all goes away. You got to be looking for these opportunities. And if you think that you don't have time for that, you can pay somebody to do that, right? We charge fees, but our fees compared to the performance is just like, it doesn't make a lot of sense. It really doesn't. It just kind of pales in comparison. And you can do these searches on how much should you pay somebody. You know what? It's all relative. Okay. It's all relative. Here at our firm, we do have a higher standard fee than most, but the service level that we offer is far greater. And I believe that our job is to try to drive superior results in alpha every single day. And like I tell my clients, if the market is down and you don't see me trading, you don't see any trades going off in your portfolio, it means either I'm sick, it means I'm lazy, or it means I feel that the thing has more down to go. And if I think it has more down to go, I have to think that it's going to go down a lot more. So I'm not even touching it. But that's usually not the case. These dips are superb buying opportunities, because say you get into the party and you're down 20%. You get into the party, it goes down another 5%, and then it skyrockets up to another like 10%, another 20%. You're waiting on it to get back up to 30%. You're going to buy back in, and it's like that's no bueno. I don't think that's a good idea. So you got to catch these things at the right time. You got to be in the right position. You got to be in the right position in order to score and to win. So thank you for letting me share today's show with you. And until next time, everybody, 1, 2, 3, let's get it.
This is thepodcastfactory.com.